And good evening, good afternoon, and good morning, ladies and gentlemen. This is Greg McLeod from Elite Traders University, and it's great to be with you for our edition of the Pip and Run market map for this week, beginning February 19th, 2017. I'm your host, Greg McLeod, and we're going to be looking at scalping the market using the classic daily support and resistance zones, the zones that we'll be using going forward for the rest of this week. Okay? And before we get started, I want to direct your attention to the risk disclosure on your screen. Make sure you understand all the risks associated with foreign exchange trading, and we'll get started promptly. We have a lot to cover, and I'm really excited about the market going forward. Oh, right. And a little bit about myself for those of you who do not know who I am. My name is Greg McLeod, and I'm the Trader Transformation Architect, the Millionaire Maker, and I am President and CEO of the Elite Traders University and Greg McLeod Research Analytics, and I'm a 21-year trading veteran and trader mentor. I trade options, futures, stocks, and Forex. I'm the foremost authority on short-term day trading and scalping. I spent 8 years as a currency analyst and trader coach at one of the largest retail Forex companies in the world. I spent 16 years as an instructor in public education, teaching middle school and high school, and I worked at a prop trading desk in a top-tiered U.S. bank. So I'm really happy to have you here with me, and the agenda for today is, in this edition of the Pip and Run Market Map, we will look at key levels of support and resistance for majors and gold, and possible scalp entries and targets. We'll also take a look at the high impact news events that could move the market next week. Okay, so with that, let's go ahead and dive into our first chart. And I like using multiple time frame analysis, meaning that I like zooming out to a larger time frame, like a daily, in that 50,000 foot view of the market. And that gives us a big overview, and then we go down to a smaller time frame and see where price is meeting those key levels of support and resistance. The red lines that you see on your screen are daily support and resistance levels that go back, that span a couple of years. Okay, and so the theory behind it is that the longer the support and resistance level has been in effect, the stronger it is, and the more respect that price has when it gets near it. Okay, so we're looking at the euro, the most widely traded currency in the world, and we're going to take a look at what's going on here on the daily chart. We'll zoom on in. Our key levels, I have the 200 simple moving average, and I teach my class at the Elite Traders University and also our Pip and Run boot camp, is that the bears live below the 200 simple moving average, the bulls live above the 200 simple moving average. Right now, the euro is below the 200 simple moving average, and so the bearish opportunities seem to be more profitable than the bullish ones. However, we can as scalpers, we can play these bounces here. But we can see how we came down to this, after a steep decline, we rallied off the lows here. And about the 1.0350, like it's almost a double bottom. We rallied up to that 1.0773 that I talked about, and then we cut through this 106.57, and this area we cut the 105.87, and the wick sellers. This was a full body bearish candle, but turned into a hammer reversal. Buyers stepped in, price rallied to the north side. We got price bouncing up above this zone here, and so now we're between these 106.57 and 105.87. So we're about 100 and maybe actually about 70 pips away from between this area, so we're kind of stuck in a range here. Okay, so let's go ahead and just dive down to we're going to dive down to make an hour chart. We can see that price respected this area. It got above it a little bit, looks like it was going to go higher, closed back below it, wicked, failed to penetrate this heavily defended zone, and came below a 200 moving average and moving down. Okay. Now we might come back and test support at 105.87. I'd like to get long in that area for a bounce back up. However, if we close below, we could come down and roll down even lower, down back to the 105.09 area. Okay. So that's what we're looking at. Looking at buying at 105.87, maybe selling a bounce to 106.57, buying a break above 106.57 for the euro. Okay, let's keep it going, keep it spicy, keep it pumping here. And let's go ahead and go to the British pound versus U.S. dollar. Start with our 50,000 foot view from the daily chart, and then and I know it's like looks kind of like, wow, Greg, look at all these crazy lines, but they're daily support and resistance levels, and from the top of the mountain, it looks kind of congested, like traffic. But when you get down to the smaller time frames, you'll be able to see what I'm talking about. And let's go ahead and click that out, and click something different here. All right. So similar move here, sideways lots of consolidation. You got here. This is 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7, 8, 9, 10, 11, 12 days in a very tight range. Usually when we have this type of compression, we usually have some type of a breakout. So we've got this really tight compression. So a break above 1.2511 could open up a door to 1.26772. So let's dive on down. We've got this double bottom action going on here. We got this low back in October 10th through the 31st, support. Then we tagged the same area in January. So this looks like it's going to launch the upside. Looks has like kind of a bullish slant to it, but let's drop down to the 60-minute chart and look for opportunities here. And we can see that we've kind of like cut through these levels of support, hammered this 125.11 and lower swing high A, B, C, and we dropped down almost to that 123.80 area. Got a little bit close, then rallied, and then. So I say if we get above 124.27, we could probably move quite a bit higher to the 200 moving average, 24.84. Okay. So that's what we're kind of looking for. We're looking for some type of a bounce. And let's go ahead and do a couple of things here. That I'm looking for a break. Maybe come up to the 200 and maybe even more. The 200 moving average probably will be a good conservative target. If not, price did have tall wicks there. Come back and test the support, and that's what I'm kind of looking at for that. Especially if we can break above this swing high here. That's going to be 24.50. If we break 24.50, we can possibly have a nice move back up to the upside to retake this area. In fact, I'm going to go ahead and draw a trend line, some type of a trend line across here to kind of like show that we need to break this supply line and supply line or downward trend line, because every time price rallies up, excess supply comes on and lowers price. All about supply and demand. Okay. So again, we need to get through this zone maybe, and that would be very helpful if it did. Okay. All right. So that's the pound versus U.S. dollar. Let's go ahead and keep it going, and let's go ahead and look at the Aussie dollar. Aussie dollar was, and you can see this is a. Let's go to the 50,000 foot view before we come back. We'll go back to our daily chart. And we can see that that was our trend line break that we were looking at a couple of weeks ago. We broke that, and we're just on a tear. If you zoom out, you can see the double bottom that we had. Nice double bottom. Double bottom target. Usually the top of the W pattern. This is the W. See the W? if you can follow my cursor, this is a W pattern. And usually the top here is the target. And so 7760 would be a target. We see consolidation, couple of red candles, couple of tweezer bottoms at a significant level of support at 7655. Let's go ahead and zoom on in, drop down to our 60-minute level, and we can see what's going on here. So we can see a bit of price. There's our trend line break, rallied up. And what happened here, we didn't quite get to the 7740 area. We fell short of that. And because it didn't reach that next classic level of resistance, it dropped below this area. And then once it consolidated, it looked like it wanted to try to rally up, hit this zone. Remember, I drew these zones about 3 weeks ago, guys. I have not added anything new in 3 weeks. That's the great thing about this. You go, Greg, that's a lot of work with all those lines, but you do this once and you leave it like that. You save the template, make backups of the template, because these lines do not change. Okay, they really don't. So we've got support at the 0.7655. Right? And maybe this is some type of ABC. As long as this area holds, we look for price to bounce north, maybe back to maybe back up to the old high. It's it'd be interesting if the U.S. dollar is doing, but usually we have this type of a pattern. We get a complete retrace up to the 7708 area. Okay. So we'll see. We'll come back next week. Hey, Greg, what happened? I didn't get there like you said. Okay, don't worry. We'll see. Either it gets there, if it breaks this low, takes out this consolidation. We'll look at 7609. We got a nice 46 pip drop that can happen here. Big drop to the south side. Bam, shakalaka. No, if this holds now, it's all if then. If this holds, if this red line holds, we expect price to go up. And if it does not, we expect price to tumble. All right. So we want to see some type of bullish reversal candlestick pattern or something that is going to give us some type of a clue that price wants to continue. Now, what's giving me a little bit of a clue here is this big bullish candle here. However, we have this little Harami indecision right there. So you gotta wait till Sunday, Monday, and look to see what happens here. But if this level holds, we look for price to move higher. Okay. Let's go down to long as you're here. Let's go to New Zealand dollar. Once we're in the same neighborhood, let's go here. This is I'm gonna start the daily chart. Start for 50,000 foot view, overlooking. And this is classic stuff, people. This is like what they did in olden days, where we took a ruler and drew straight lines across price. Okay, so it's a lot easier now with computers. And you can see that we have higher swing highs, higher swing lows, and it was basically in a big range between 68, 73 on the low side, and maybe like 70, 75, 00 on the top side. And we really haven't gone anywhere, but we haven't gone lower. We haven't gone higher. We're consolidating off this low. This is the low, and now we're consolidating. So it'll be interesting. We have a higher high, a higher low, and so basically we're looking for a break below this low, and that really should have a line on it. Okay. And that was like an oversight on my part. This is a daily chart. Every wick should have a line, right? And this one's uncovered. So. Boom! There we go. It's fixed. And let me just click that. All right. Let's let me go ahead and save it too. I'll have to redraw it again if I. Okay. So let's drop down to a 60-minute chart. I dropped down to the 60 because it's a nice short time frame, because all this is going on in the daily and no one ever sees what's going on here. Remember, it's 24 of these candles in one daily candle, so we really don't know what's going on. But you can see here where we kind of topped at the 72.32 area. at the 200 moving average on the Kiwi, broke the daily support 72.05. Again, a line that I drew like 3 weeks ago. It held there for a bit and then broke. If you sold the break, it was a nice kind of slow decline. You got from 72.05 down to 71.79, so about 40 pips or so. Not bad, you know. Took a while for it to get there, but it may nevertheless when this floor broke, then prices cascaded down. Now we can expect price to probably go down to that 71.65 area, and maybe even venture into the 71.50. There's a big wick there that might need to be tested, right? And we can actually draw a trend line across the top of this, and if price breaks above that, we might be ready to take this long to the north side. Okay, so we have this kind of wedging formation here. Yeah, because it's not falling like just falling straight down, like this one. Boom, fell, right? It just fell straight down. You know. And that. So this one fell. Notice the angle. It fell straight down. This one is falling, but it's falling at this angle, meaning that people are buying the dips. And when the supply is gone, this we're gonna have more demand than supply. We'll get a break above the supply trend line, and then we should see a move back to the upside. In fact, measuring objectives, we could probably if we just took a simple fib expansion tool, going from the bottom to the top, and now we're here to a Drake, kind of from the bottom of the top, and now we're here. All right, and then we're looking at the nice open space there, 72.89 is where this could go. If we get a break, now we need a break. We need confirmation. Okay. It doesn't. It's like catching rabbits. You set a trap. You know, why set a trap and you catch anything? It was like, duh. You know, the rabbit didn't want to go, right? So it's like this is how it's like trading. We're trying to catch a rabbit here, and the rabbit ain't crossing the line, so he's gonna go a little lower, right? He might go into another trap. So he might say, okay, if it breaks this line, I'm gonna catch a spot, right? So we have to be careful and look and see what price is doing. We draw parameters and then we look where to trade from those parameters. Okay. And right now we're in the middle of two zones, so it's not clear buy or sell. Sell on the break, buy on the bounce is the method that we do here. And we get close to those big daily levels of support. They provide big bounce opportunities where your scalp is not. You're not scalping for 10 pips. You're scalping for more like 100 pips. And you're like, well, how can you scalp for 100 pips? Real. Watch me. All right. Let's go to the Canadian dollar. And let's start with a 50,000 foot view. I call it 50,000 foot view. I'm trying to give you that. We're on an airplane and we're overlooking the scenario. We're just getting a look at this could be like a river or a valley we're flying over. The topography. We're noticing the undulation, the twin peaks, right? Double top, dollar CAD, and kind of an A, B, C. Now 1, 2, maybe 3, 4 or 5 to the upside. It might be very interesting what happens. It might 1, 2. We may break a rising trend line. You have higher lows here. See, we had lower highs here, right? I mean lower lows. We had lower lows, but now we've switched and have higher lows. So it'll be interesting if this line holds, we can see price rally higher. If not, then we could go lower. But we've got lots and lots of support there. And you might say, well, gee, all these lines, it really shouldn't go anywhere. Well, entry might do. Let's go ahead and go down to a 60-minute chart, and you can see that there are big gaps in between, and these gaps are huge. Some of them are 100 pips. So we take a price ruler and we just measure from one daily line to another daily line, and that's 40 pips right there. Okay, that's a 40 pip move. If we were to get long in the break and sell when it gets into resistance, it's 40 pips. So this year you get your 40 pip, 100 pip blocks right here from the top to the bottom here. If I draw one there, I'm doing a little teaching here, so got a little teaching mode here. And this was like 36 pips. About 36, 37 pips there. So once you get that break, you got it going on to the north side. Now, And you can see price rally here, tag that one spot, 13119 area, dropped, okay, and then came down, tested this one spot 3019, long wick, buyer stepped in, prices rallied to another resistance point, support comes in, now we're heading back towards support 130.79, and the 200 moving average, we have confluence of support, two different types of support at this area, so I would expect this 30.79 area would be a great buy point with all that support right there, and you could probably put a fib there as well. And so what we're going to do is we're going to line these areas up at this confluence, and then lock and load, because that's going to be a good opportunity, a good target area to get into the market, right? If the support holds, okay. Remember, and then we know if it breaks below, gets out of there, hey, we're stopped out. So we can quantify our risk and know how much we are going to make. We're going to make at least back up to here, and if we break, we take off some piece and let it go. Okay. All right. Let's look at the Swiss franc and the Japanese yen. Look, we'll look at the majors, and then we'll look at gold. Okay. And there we go. Here is 60,000 foot view, 50,000 foot view of our Swiss franc. And we also had, it's kind of interesting. We had this kind of a topping pattern, this double bottom here, or double top, a topping pattern here, has an M, and usually the target is down here. It's 95.15. But the dollar pairs are they have a seasonality where they really don't bottom out until sometimes they don't bottom out until like April or May, then again maybe October, November they bottom out. So we've got a lot of time where we might just sit up here for a while and just twist around. But no, that's why if you're a trend trader like you're waiting for this, oh dear, good luck. Take a nap. Take a really long nap. Take up knitting if you're waiting on the trend here. Okay. Now we drop down to 60,000 foot, down to the ground. This ground level. This is trench warfare, guys. We're down here. These are your daily support and resistance lines. You can see that's where the battle is. Price is bouncing off one daily support, another daily support. And now it's topping out here, and looks like we're getting some of a U-turn, and maybe get back below 10023 on the euro. It's a euro 60 minute, and there's goodly amount of pips. We can do a measurement objective. We can measure from here to here and say, hey, you know what? There is a 35 pips between here and here, or if price continues to move higher. Then we could maybe it bounces off this line, right? And maybe it bounces off the line, and then we get another possible target. Maybe up to it's like 19 pips, so 20 pips at the top. And if we break and extend even more, then we're looking for about 41 pips. Okay. So we're at these daily support and resistance levels. They act like a barrier, and we just look for price to turn around. Either buyers, I would expect buyers had stepped in here. We got this long wick, so we may actually see a bounce. We're sitting right, basically closing on top of a daily support zone, and I would place a stop below the swing low and go for a bounce back to the old high. Maybe get you a little dead cat bounce off that area. Okay. If we close below that, then we can go for a short. So again, we're looking for when we get close to these red lines, that's where we're looking to get paid. Okay. And have a very good risk management at those lines. Okay. What's my line? That's like a name of the show. That's an old show from the olden days. Okay, we looked at the Swiss franc. We're going to look at the Japanese yen. Japanese yen got super strong, and lots of uncertainty in the world, and that makes the yen just people's strong. Plus, they want to move their money back to Japan, but you also have a seasonal pattern where Japanese corporations repatriate their funds, and that happens, going into March. So you see periodically, the yen strengthens, and so this is like the season. Tis the season, We rally up to December, double topped, and now our money's coming back. And we got maybe 1, 2, 3, 4, maybe a 5 come back and tag 111.52. So we might see more downside. Lots of red candles here. Downtrend. We're above the 200 simple moving average, which is interesting. But we may come back and actually tag it, touch it, maybe bust below a little bit. Let's drop to a 60-minute chart and look for some opportunities there. And we can see now here I was looking for a break. We got up. And I actually expected a bigger, deeper rally, and we didn't even get anywhere near that. The rally was very small, and then the drop. Okay. So my direction was, I was looking for a bigger rally to the north side. We didn't get one that big of a rally. In fact, let's put a fib on there. Because I'm usually trying to get that 618 rebound, and basically 23%. This thing is so the dollar is so weak against the yen that it barely can get a 23% correction. We can get a 38.2% correction. Could not. But price is sitting at this 112.84. Lots of support there. A break below 112.84 opens up the door to our next target zone. And 111.52, and that is like 130 pips away. Okay, because there's a big gapping, wide-ranging candle there, and we don't have, we just basically could fill this gap. Now he's saying probably, there's some swing points there, but they weren't daily swing points. So I didn't draw a line across them. So this gapping space, how prices rallied up. Well, we can see the same kind of we call symmetry going on the way down. We get some symmetry action like that, right? So the same thing that happened over here, where we had this kind of like smooth move up to the upside, and it's I just wanna draw a box. It won't let me do it. Anyway, but you get the idea. I want to draw a box. But okay. So and there's buyers stepped in at 112.63, a break below 112.63. Look for a big cascade move down, and that would take us down to that 111.52. Really big short order. I mean, the price has been moving very quickly in these yen pairs, and So be careful out there, guys. I'll look at pound yen, the dragon. I got like 100 pips on it last night. Very cool pair to trade. And I got this big breakout south on the bar. It broke as soon as I saw it break the daily support. I'm short, but let's go back. I'm jumping the gun here. Let's go to the daily chart and look at the yen. And there we go. And you can see that price gap down, broke all kinds of levels, stopped at this one level a little bit, this 32.45, rallied up, and then dropped down to the 26.36. Again, this is daily, and now we're chopping around here. We got these mysterious two candles. I've been seeing that on a lot of charts, these side by side. Red candles where price dropped, closed, and then opened here and then dropped again. Almost like they tried to gap it up and they came back and filled the gap right away. And I've also got this kind of like a head and shoulders. Now you can't see it on the daily charts. Let's drop down to the 60. You can probably see it a lot clearer. Okay. And you can see that I had kind of a shoulder, a head, shoulder, then you measure the distance from the head to the neckline, and the break takes you down here. Okay. So we're looking for 136.49, and we're hanging right in a big empty space here. 38.83. I'm looking at the next target. 37.11. And I think we take out all the way down to 132. I think we really take out a lot of movement. Okay. If this is some type of a Gartley and AB equals C, CD, where the distance from this peak to this peak is equal. We look for this peak and the same distance. So if I were to draw that out, and I know I'm spending a little bit too much time here, but I think this short pound yen trade is would be very beneficial. Okay. And if we look for a break from there, actually you can draw where would you draw your trend line. Well, if you drew your trend line earlier. Okay, I just drew the trend line here to show. But this is where your trend line actually was at one time, right? That was our first trend line, right? And then shoulder, and you broke here, and actually you can go. You would take something. Let me go ahead and remeasure that again because I messed it up. Right. So I'm gonna measure from this low, and then and it's a little crooked. And then from this break. So we're looking at a move down to 129.59, about 113. No, it's a huge move there, right? Yeah. Yeah, it's like 1,100 pips to the south side. Okay. So big move. Okay, where this is a corrective pattern up and it broke, and so now we might can see a bigger move to the south side there. Pound yen. Okay. So that's looks pretty good for next week. And I don't know why that moved. And anyway, let's go look at gold. Gold looks pretty interesting for a sell. And I don't want my 200 moving average up there. Don't know what happened there. Showing data window. Yes. Okay, I'm gonna just remove that. Cut. Okay, there we go. All right. So here's our. Now let's go to the bigger view of gold daily chart. And gold had a big run. I mean, look at that run. It's corrective in nature, where we have this big move down. 1, 2, 3, 4. We look for a fifth wave move down. We're double topping near the 1251.02, and I think we go down really hard and fast, and eventually hit 1127. But if you go down to a smaller time frame chart, you can scalp it on the way down from the double top on the daily, where we got this topping action here at 1242. We break the 1, 2, 3, 4 area. 1, 2, 3, 4, 4, 5, and we look for a drop down to 1221.93. Okay. And that's would be the double top. The double top price objective is the bottom part here, which is that red line, 1221.93 on that scope. Okay. Let's go ahead and go to the news. Okay, guys, welcome back. We're going to go into the news. We're going to go through it pretty quickly, looking just at the high impact items. These are the ones that can really move the market, 50, 60 pips at a time. Usually those right impact numbers. The first one on Sunday is from New Zealand. PPI input quarter-on-quarter is forecast to fall from 1.5% to 0.9. That could cause the currency to weaken. PPI is a measure of inflation producer price index. And so we could see at 4:45 p.m. we could see the Kiwi weaken versus the dollar and the Swiss franc and the yen. If this comes out as forecast, okay. Now let's go to Monday. We don't have any major news until 7:30 p.m. In Australia we have monetary policy meeting minutes, and that will tell us what they decided at the last meeting. And basically you're looking for language saying that, hey, it's going to be hawkish if they believe that they're going to tighten rates or normalize rates, raise interest rates. That's good for the currency, causes it to go up. And if they say, hey, we're not going to raise rates and our economy sucks, hey, we're going to, and then the Aussie could fall, okay? Or maybe they want to be more aggressive, use words like accommodative, and that could cause the Aussie to fall, okay? Tuesday, we don't see any major ones. New Zealand again in the news, and that might be the pair. If you see a lot of news from Australia, New Zealand, those may be the hot currency pairs that you want to look at. Look at your strong week analysis for those pairs. Specifically, you want to look at Euro Aussie and others. So New Zealand dollar, tentative GDP price index, previous numbers 1.3%. And so we don't know when it may be released. It's tentative. Now you don't get any U.S. Bank or U.S. news. You do have flash services PMI expected to rise from 55.6 to 55.8. That could give the dollar a bid on Tuesday, February 21st. Okay. And let's go ahead and let's go down to 4:30 p.m. We have the Reserve Bank of Australia. Governor Lowe is going to speak. And again, looking for any clues to how the economy, the condition of the economy is in Australia. If they're seeing inflation, they probably have to raise rates sooner than later, and that could cause the Aussie dollar to rise. Remember, currencies will move on the expectation of inflation, not just the actual interest rate announcement itself. Okay. However, if they are basically saying, "Hey, our currency has to stay weak because we're not doing that well," then we see the Aussie fall. Okay, and I would probably pair that Aussie yen. It looks like a real good one to pair in case the RBA comes out with a very dovish announcement. Now, Wednesday, February 22nd, we're looking at the UK for second estimates of GDP, quarter on quarter, 0.6%. 0.6% is the forecast, and GDP stands for gross domestic product. And it's the sum total of the goods and services of the economy. It's a barometer of measuring the health of the economy. And if it's a better than expected number, we can see the pound rally. However, if it's a weak number, we can see it sink. Okay. So that's at 4:30 a.m. Eastern Time on Wednesday, the 22nd. Now, 8:30, we have Canadian data. Core retail sales month on month. People buying or people shopping? 0.1%. Before forecasts estimate 0.8%. That could be very good for the Canadian dollar, and we could see the Canadian dollar rally against maybe some weaker pairs, maybe rallying against the pound and the euro, and maybe even the U.S. dollar if the U.S. data comes out as weak as well. 10 a.m. we'll find out with existing home sales, and we'll see they're expecting it to rise from 5.49 million units to 5.55 million units. That would be good for the currency. When people buy homes, existing homes, they got to put furniture in, they got to put carpeting, they got a yard, they got to buy furniture, and they have to buy appliances. So the home buying process really was a big shot in the arm for the economy. So any movement in positive movement in home, even though it's not a red, it's an orange, it's medium. That's something homes and jobs and inflation. Those are things that you really want to keep your eyes on. You don't want to be having your head in a hole in the ground like an ostrich and not be aware of what's going on in these big things. Okay, you may not necessarily want to game them or trade them, but at least stand out of the way, because there'll be plenty of opportunities to trade after these announcements pass. Okay, 7:30 of private capital expenditure quarter is a high impact item at 7:30 p.m. on Wednesday, February 22nd. Expected to rise from negative 4.0 to negative 0.4. Okay, so that should be that could be good for the Australian dollar. If it comes out like that, and these are forecasts, these are guesses, they don't know or they're not telling you, and so anything can happen. So be careful of these numbers. Okay. But just be aware that if you're trading at 7:30, all of a sudden your position's going the wrong direction. There's probably some news behind it. Okay. Thursday, go ahead. The dollar's unemployment claims. 239,000 was the last week. His weekly unemployment claims. It's a very volatile number, and it changes from week to week. 242,000 is was estimated a little bit more unemployment claims, and like I said, it's a volatile number. It changes weekly. So it's unless there's some very strong, crazy number out there. it's going to impact the currency. But the impact might not be a deep one. Now, crude oil inventories is a high impact item at 11 a.m. And even though we don't trade, a lot of us don't trade crude oil. If you do, good for you. But you can trade proxies for oil like the Canadian dollar. Canada is one of the largest suppliers of oil to the United States, and we're not going to invade Canada and take their oil. No. Canada has a lot of oil, and so when the oil prices go up, we can see the Canadian dollar go up. And also look at supply numbers. Like if we have a draw, when we say a draw means like our suppliers that we have on hand go down, it pushes up the price of oil as well. But we have a surplus, a glut, then our stockpiling, then that means there's supply and demand. The more you have, the less it's worth. So if you're trading Canadian dollar, you want to monitor those crude oil inventories. Okay, and then Governor Lowe is going to be, he's on fire. He's speaking again at 5:30 p.m. and so maybe they're trying to talk down the Aussie dollar somehow. Maybe all this, a lot of RBA action this week. Minutes and the governor speaking. So usually when they got a lot of central bank stuff going around, they're trying to do something. And most likely, most countries want to see a weak currency. That way they can stimulate in a global economy. They want to stimulate exports through a devalued currency. And so like at 4:30 we have no, actually 8:30 Friday, our last high impact item is Canadian CPI, expected to rise from negative 0.2% to 0.3%, and that could give the Canadian dollar a needed maybe a boost. And we have some low medium impact new home sales at U.S. at 10 a.m. and German core CPI year-on-year at Canada. Now the new home sales expected to rise from 536 to 575. If that number misses, you could see the dollar sell off. And if we had strong Canadian data on the same day and weak U.S. data or surprise weak data, that number may come out weaker, then we could see the Canadian dollar drop. Okay. So it'll be very interesting, how the data may be gained. And then also you're going to have revised University of Michigan consumer sentiment, expected to actually rise from 95.7 to 96.1. People feeling good out there, and that's when people feel good, they buy things. They buy things that's good for the economy. So that is the wrap there for the news. And so. If you have any questions, you can always email me at greg@elitetradersreview.com, and we can get that stuff clear to you. Okay, guys, I just wanted to thank you guys for attending the big Valentine's special Pip and Run our open house, open heart special that we had. And we had great workshops. We had 4 great workshops that I did especially for the members of our Pip and Run Forex Traders group. I want to say hello and thank you to all you guys. And also we had some live Pip and Run trading. I want to thank Marco and Adina. I want to thank all the people that posted. And we worked together. During the time we had the big FMCM news, and so a lot of you guys were able to take care of some things, and we worked together and got through it, guys. We got through it. Pip and Run Nation. So I salute you guys. Let me know how I can be of assistance. You have an opportunity to join me and be part of all the festivities, because even though this Pip party is over and many people scored all kinds of pips, and you can work with me. You can continue to work with me by joining the Elite Trader University or joining our Pip and Run Forex Scalping Bootcamp. And so there's 2 ways you can keep the party going, you can keep the room going, is by joining one of these 2 programs. You can click the link. Takes you to an application. It's a survey, and then we'll do is discuss your business, how we can make your business better, and see if it makes sense for us to work with each other. So not high pressure sales thing or anything like that. It's basically to walk you through what's the next steps for you to take what you've gained in our Pip and Run open house and the things that you learn there, and help you put them together in a system that will give you consistent wins and gains in your trading. Okay. So again, we had lots of members. I mean, in the matter of 2 weeks, we grew in number to 216 people, and Mimi and Leanne and Tracy was there. A big holler to everybody. Oscar and Jason Hinkle. Salute you guys. The members here. I just want to take a look and salute you guys. Kusi in there. Steve Arkema. Garth, of course. Hemi. Oscar. All you guys, here's your moment of fame here. Part of the Pip and Run Nation. John Miller, my student. Cara, my student. Business development. You'll be speaking to her. She'll be talking with you about your next steps and helping you to get your business together. Paul, Samuel, Abed. Hey, and Anthony Castellon, all you guys, members of the group, and glad to have you aboard. It was my honor to be in there. Brent, Dean, nice to see you in the room, and so I look forward to working with you. Just go ahead and click that link, and we'll talk to you soon. All right, So again, happy pipping to you, and we'll see you in the class. Our first class starts March. We're looking at March 1st, and so you'll have there's a countdown clock that you can actually click and sign up. Okay, and then you can actually go there, and that will help you get to where you need to go. Okay. We can't. Let me go ahead and. Yeah. So registration closes for our classes. They're going to close in 10 days, 7 hours and 44 minutes. And you can just go ahead and click here to sign up. We've got some bonuses when you sign up as well. And we'll look forward to being with you. Just click that button here. Remember, we went over about two of the 9 ways of making money in the Pick and Run method. So you saw 2 of them. So if you want to learn the other 9, join me. Go ahead and come over here to leadtradersuniversity.com/apply and sign up for our strategy session. That's the last free gift for you. And you just choose a date. You click the calendar there. To book a date. You click the date, and then you'll get a time, a confirmation email, and then you go ahead and fill out this application. It's a survey, just to find out what's going on with you, how we can meet your needs and things like that. Real simple. Click submit, and it'll take you to another area where there's some more videos and some more trainings. There's 2 more videos. I forgot to mention that. 2 more videos once you fill out the application. So bonus lessons galore for you. Okay? All right then. So look forward to seeing you. And you take care, guys. Happy pipping.
Hey guys, you want to catch the next big Forex move? Then make sure you stay in touch with us via social media. You can follow me on Twitter, Greg McLeod. That's MCLEOD, Trader, TRADR. On Twitter. You can also join our distribution list at www.elitetradersuniversity.com. You can also join my free Pip and Run group on Facebook. And make sure you check out my YouTube channel for my latest scalping videos, Gregory McLeod Trader. Make sure you give us a like, a thumbs up, and share, and also subscribe. Be a subscriber so you can be alerted of my next videos. You can also connect with me via Instagram, simply Pip and Run. Or you can just reach out to me via email, greg@elitetradersu.com. Look forward to hearing from you, and have a great day. Happy pipping. Cheers.